Hey everybody, welcome back to another video. So, is Tattooed Chef setting up for a short squeeze? Now, Tattooed Chef is up another 5% today as we speak, and you can see here we've had a really good rally over the last 10 days or so, really breaking through this trend here. Now, we've come to the attention of Wall Street Bets. So 2 days ago, a user by the name of Araforeign has posted a really lengthy post explaining why he feels Robinhood could be setting up for some sort of an IV short squeeze. And a lot of this is very complicated, but let's look at some of the kind of takeaways for longer term investors, which they can kind of think about. So what he points to, if we just skip through this, is the first section he mentions about institutional investors. So he lays out some of the fundamentals that this is a good stock with a lot of institutions holding shares. So you can see here from the Bloomberg screenshot we've got here, you can see that of the shares held, about 18% are by institutions, and of the float, about 36% is held by institutions, which is obviously a great sign for anybody invested long term. And he then goes to mention that even after the insiders were allowed to sell in April, the CEO only sold 2.5% of his stake, which is always a good sign, right? Moving on, he then mentions about some of the key stats. So he mentions that we've got 15 million shorts. He calculates a 61% short interest, which we'll come on to shortly. And he says there's a 340% cost to borrow. So even if we weren't seeing a short squeeze, to the likes of AMC and GameStop with momentum, these are all interesting factors which will naturally have an upward pressure on TTCF. So if we look here, and we got the screenshot of Ortex right here, you can see he's sharing that there's 15.4 million current short interest. You can see the cost to borrow is 340 and it has been at a max of 380, which is just massive. And so naturally that's going to make it more difficult for shorts to hold on to their positions. He then mentions that the float is 40 million from Bloomberg. He's saying institutions have held 15.6 million, which we looked at, and the short interest sitting at 15 million. He then calculates what is called the trading float, which is not counting the short shares. And he's saying if you use this figure, the trading float, so you got 15 over the 24, you're at a 61% short interest trading. So I can see what he's trying to do, but your normal short interest float would be your 15 over your 40, which is more like your 37% short interest to float. And that's what most people will see if you pull that up on the Bloomberg terminal. Either way, it's still very high. I think what a GME and AMC, probably around 20-25%. I've not checked recently. So it's still a fairly high, even if you were to take the 37 figure. What I found very interesting, however, was this next thing. So you can see from Ortex, he's not included that on his screenshot, but I did check, and you can see on Ortex that we're sitting at max utilization. Okay, so that's the availability of shares to short. So we're at 100% utilization at this point. And what he shows in this diagram is each of the 3 times we've reached max utilization, it's been followed by a rally. So you can see here the yellow line here at the top is leveling out at 100% max utilization, right? Because we're at 100%. And you can see here that from the bottom, coming out of the range when the max utilization dropped, there's an 89% gain. Similarly, in the second period, he shows that when we get to max utilization, from the bottom to the peak there is a 51% gain. And now we already had a 10-day rally. Are we going to continue heading high? And again, that aligned with the 340% cost to borrow and the still high constricted float with the short interest. Could this push Tattooed Chef further higher? And this is kind of what he gets at. Now, he mentions a whole bunch of different things around the SEC and the regulation SHO list. Do go and check that out. See if you can make sense of this. He then talks about failed to deliver and how this can cause the share to create a loop which keeps sending the price higher. So he says short bears, short TTCF at 340% cost to borrow to try for a 5% gain, but the broker can't deliver the shares. So the broker then closes out the short bear on the 3rd day because they can't fulfill it. And he then says the short bear doesn't like that. So they then buy puts on with the crooked broker. So they can assign them again, making it look like they closed their position when they never actually closed it. So they get it for another 3 days. And he's saying, therefore, what will happen is you can end up getting more than the available float because they just keep borrowing shares which they don't have to borrow. The brokers are doing that, and he claims that's illegal, and this can cause an iterative loop. And that's what he's talking about here is the vicious cycle. So price goes higher, forcing even higher borrow rates. Shorts with high borrow rates try to reset the clock. The reset clock jacks the IV, implied volatility, higher, making it more unprofitable. The shorts will then start closing. The price goes higher, and then it repeats. So that's his plan on what he thinks should happen. He thinks it's going to happen any time now. He said repeated tests of 20.5 range results in huge panic sells. And he gives a whole bunch more of data. I thought that was really interesting. Do go and check that out on the Wall Street Bets Reddit, but definitely TTCF is starting to get a lot more attention recently on these Wall Street Bets channels. Before, it was a very small community kind of invested in TTCF for the long run, but now you're seeing it on Wall Street Bets. And will this make mainstream news and therefore bring in a whole flow of new money? It'll be interesting to see what happens over the next week or so. There you go, guys. So we're sitting at a high cost to borrow rate, 340% plus. Short interest, depending on how you're calculating it and the sources you get it from, it's such a mess. But I think it looks like at least 35, 36%, 60% if you take it as a percent of the trading float. And then obviously we've reached max utilization, which the last 3 times, as this guy has shown on Wall Street Bets, has led to a decent rally. And we've already had, even if you just ignore all of that, the fact that we've had such a good rally here on the charts is, let's see if we can pull that up. So the fact that we've just had this rally here is quite impressive. So you're ready here. If you bought that in at the dip there, we've had a 44% increase already, which falls in line with the max utilization. All right, guys, there's an update on TTCF, the Tattooed Chef. We'll see you in the next one.